Hey traders, this is Blake Morrow with Forex Analytics, and you are listening to the week ahead video for Cinco de Mayo 2024 or May 5th, 2024. I hope you guys are having a great weekend. This last week was nuts. It was a crazy week. I've got a lot to talk about. I want to talk a little bit about, what happened with the Fed, NFP, ISM data this week. I want to talk about Japanese yen intervention, or the BOJ Ministry of Finance, how they did it. And then also, this next week, we still have a couple central banks that are meeting. We have the RBA, the Bank of England, we have Banxico, we have 10 and 30-year auctions, we have Canadian employment at the end of the week. So, and there are some holidays in Europe. So we're going to cover all of that and more. And I just want to say, if you are familiar with these videos, just to remember, they are chaptered. Especially if you watch this video a couple hours after the video comes out, you can go through and fast forward to different portions. And maybe even some of you want to go right to the very end, where we review last week's trade setups, and then we talk about this week's trade setups. If you're already familiar with what's happening this week. But we have a few things to talk about. And I actually want to start off, I want to talk a little bit about the jobs report and ISM and FOMC. So the jobs report, even though the headline number was below expectations, and matter of fact, what we can do is we'll just go into the Forex Analytics application, and we're just going to go ahead and pull up the calendar, and so this way we can kind of look at it and talk about it. So if you look at the jobs report on Friday, you can see that we created. Let's get to the number, the headline number. We still created 175,000 jobs. I was having a conversation with Jim Welsh. I'm like, were you disappointed with the number that we saw on Friday? And he's as I was interviewing him, he was like, no, it's still well above where we need to be showing growth. So that number wasn't bad. The unemployment rate did tick higher, but it's still below 4%. And the markets really saw this as, an overall positive, because the data wasn't so bad where traders were like, oh, here a recession is imminent. At the same time, it was still weak enough, showing a little bit of signs of weakness, where the Fed's going to be a little bit more cautious about raising rates if they have to. So obviously equities responded positively to that. If we would have, let's say only created 50,000 jobs, it may have been a little bit different story, but that wasn't the case, obviously. But the thing that really got me this week, and I think that we all need to pay attention to, take a look at the ISM services data. It came in contraction. Now, it was expected to. On the ISM data right here, you can see it dropped to 45.9. But the services PMIs right here, they were expected at above 50, and they came in below 50, so it's contraction. But it wasn't just the services data, it was also the manufacturing data earlier in the week. If you look at the ISM data that came out here, they're both in contraction as well. So those are a little alarming in my opinion. Now, I do want to say this about the Fed though. When we walked away post FOMC on Wednesday, it did feel like that we are going to be very data dependent from here on out. And when asked about hikes, the Fed chairman's like, there's no more hikes coming. But at the same time, is inflation still a bit of an issue? I think it is. So we're stationary. We're going to be watching inflation. We're going to be watching jobs moving forward. Probably, either one of those trends are going to move the needle a little bit. But what we've seen this week, like we talked about last week in the S&P, it's a lot of two-way price action, which is going to play great into us as traders. Now, I also want to talk about Wednesday. On Wednesday, there was intervention in the market. And last week, and let me go ahead and pull myself off of here so you don't see me. Last week, this was the thumbnail chart that I used, that if you watched the YouTube video, you probably saw this, the yen, can it be saved? Well, what we've seen this, obviously this week is a couple bouts of intervention, and that's put the the yen right back at the breakdown point. Now, this is important because obviously the Ministry of Finance and the Bank of Japan are trying to make this to where we get a false breakdown and a big reversal. Now, if you don't remember the commitment of traders that we talked report that we talked about last week, you can see, and remember this data right here, it was reported as of Tuesday of last week. There's still, the speculators in the yen are still extremely bearish yen historically. I mean, you go back to, like, history, all as far back as you can go, and you can see speculators in the most short yen that we've seen, probably historically since they've been pulling this data. That's scary, right? I mean, we talked about this last week, and so it shouldn't be a surprise that we're seeing this reversal. Now, I'm going to be interested to see what the data shows on Tuesday of this next week, next week on Friday, which will take us up to this Tuesday. I bet you that we've seen a little bit of a reversal there because you're seeing people get squeezed out. But what that also means is there's a lot more to go if the Ministry of Finance and Bank of Japan get a little bit more aggressive. Now, speaking of aggressive, let's talk about on Wednesday, and this is a situation that I think that you guys and gals are really going to benefit from. And if you were not around for the intervention that happened on Wednesday after the market closed, then I want you to stick around for this, because I think this is going to be a really important conversation for you, because I happened to be in front of the computer when it happened, and I traded it, and our traders in our chat room really benefited from it, and I'll show you how I did it and why I did it. Okay, so just stick around for this, because this is going to be really important. So if you're looking at the U.S. dollar Japanese yen when this move started, it was after market close, and like I tweeted, I said, and I tweeted about this. I said, the Bank of Japan's, this Ministry of Finance is pretty sneaky that they're doing it at this time of the day. I'll be the first one to admit, it took me probably about 30 or 40 pips lower to realize that this was happening, that this was truly taking place. But you have to imagine that the market is very illiquid, right? The market is extremely illiquid. And when it's extremely illiquid, they have to be very calculated and methodical about pushing prices too aggressively. So what you were seeing is you'd see the bids drop by like 30 pips, and then automatically they come back up by 20 pips. And then they drop another 40 pips. Then they ratchet back up by 25 pips. That is just simply because they're trying to manage a large amount of yen buying when no one's in front of the computer. They can't just slam prices down because they're going to slam all the way back. They have to actively try to get people to buy yen, or sell them yen as they're buying yen. So they have to be very calculated and methodical about this. Well, it took me a few minutes to figure it out. And once I did, you could see here in the Forex Analytics chat room, when I started talking about yen, you could see that now I'm starting to post not only in the Forex Analytics chat room, but also in the trades room, images and, executions on when I'm getting in and out. And you can see I'm selling some here, closed here, selling some here, closed here. And I just kept selling every time they would uptick in the market and then close it a little bit lower. Now, the reason why I'm showing you this is twofold. First of all, you can see exactly what I was doing at the time I was doing it, as the Ministry of Finance is intervening and Bank of Japan is intervening in the yen in the Forex Analytics chat room. And so if you're not part of the Forex Analytics community, my question to you would be, why not? Because if you want to be around experienced traders like myself, that in the 1990s, I traded around a lot of internet stocks that had low liquidity. And I know exactly what it's like and what it looks like when traders are trying to, in this case, the Bank of Japan and Ministry of Finance are trying to manipulate prices lower. I can recognize that. And, where you see, comments like, you playing video game, Blake, and I'm, in and out. And you can see I continue to buy and sell. And then finally, when I'm done, you can see that comments came in like, amazing hit rate, Blake, because I go explicitly through exactly why I'm buying and selling, and talking to people about it. if you want to be in a trading community where, and this just happens to be an example where I happen to be in front of the computer, and I'm very fortunate that I was able to take advantage of it. But if you want to be in a community where there's experience, and I'm not just talking about myself, I'm talking about other, analysts, whether you're talking about Ryan popped in at, it's European hours. And at night, Ryan finally got in front of the computer because his probably phone was being lit up. Or, K-Man, who's traded on bank desks for 40 years. If you want that type of experience, why are you not part of Forex Analytics? Try it out. It's $1 for 10 days, for crying out loud. And download the mobile app. And then jump in the chat rooms and see what it's all about. And be in front of the computers when we are, and talk to traders like us that have been doing this for a quarter century like myself. So again, this is one of those situations where if you don't know what you're looking at, it's going to pass you by. And then your lack of experience, you might have missed something that was really quite amazing to witness. And so if you're in a community like ours, in the Forex Analytics community, it can really help you out in a situation like that. Anyway, it was amazing. But the reason why I bring all this up with the 6J is because I don't think they're doing this for naught. And so I'm going to be talking about the yen throughout this video. And it's going to be very important at the very end of the video, you pay attention to what I have to say about the yen. So make sure you all stick around. All right, let's continue on with what's happening this next week. It's going to be a fairly light week, but I do want to talk about what's happening with some of the central banks and go over those individual currencies. Remember, this video is chaptered, so you can actually go through and if you're like, well, I want to see what he has to say about the S&P or what he has to say about gold, I will talk about those things as we go along. All right, so let's do it. All right, so on Monday, it is May Day in the UK. So and actually, I believe it's just the UK that's celebrating that, but it is a holiday in the UK. Monday night we have the RBA. Okay, so it's the RBA decision. Now, we talked about the Aussie dollar over the course of the last week about how well it's holding up. It makes sense because you have copper that is as strong as it is, and it's breaking higher, and we'll talk about copper in a little while. But the Aussie actually looks good. And so, a break higher in the Aussie dollar could put us back up at this descending trend line, which I think is a very important one. It's, we go through a couple of wicks here, but that was more on a weekly basis. You can see on the weekly, we held the body. So I'm still paying attention to this weekly trend line, but it really comes in around 67.30, 67.50. I think the risk is that we could actually revisit that level, if not break out. Now, why could we break out? Well, maybe the RBA is a little bit more hawkish than expected. And maybe they start leaning into the idea that, like the US or like other central banks, because of persistently high inflation and growth is okay, they might actually have to raise rates before they lower rates again. So keep an eye on the RBA. And that is going to be, it's kind of late. It's at 9:30 my time, which happens to be midnight, 12:30 Eastern time. So you might want to be around for that if you have any Aussie exposure. Going throughout the week, Tuesday, there's not a whole lot going on. I think Disney reports earnings or something like that. So not too big of a deal. Wednesday, we have some more. We're pretty much wrapped up with earnings season, but we do have Bud, Anheuser, Ambev, excuse me, a lot of liquor companies. We have Shopify, which is actually one of Canada's really premier companies, but it's going to tell us a little bit about retail sales, online retail sales, and shopping, and the appetite of the consumer. So you might want to keep an eye on Shopify on Wednesday. Just listen to like the earnings call, or maybe actually just look for headlines about what they have to say about the overall economy and overall consumerism, online consumerism. Shopify is one of those big names that, like Amazon, you kind of want to pay attention to, especially if you're trying to figure out how strong the consumer is globally, right? Now, I want to talk a little bit about the 10-year, because we do have a 10-year note auction actually on Wednesday. And on Thursday, we have a 30-year bond auction. And matter of fact, one thing I failed to mention to you guys is that there's a crap ton. Yeah, I said it. Crap ton. There is a crap ton of Fed speak this week. A lot of Fed governors are speaking this week. So just watch those random headlines around the market. So the 10-year is actually testing its previous breakdown point. Now, this is a very big deal if you're trading currencies, because in the event that we start to see the 10-year rally, especially on some strong auctions, if there are some strong auctions on Wednesday, and we start reaching for the 50 DMA or the 200 DMA here that you can see right here just above the market, that means yields are coming down. That means the dollar may continue to slump. So keep that in mind as we head into this week, especially with the 10-year. And you can see how the 10-year had reversed at the 161% extension. I can actually remove that now, and you can see the 78% retracement. We've been talking about it all week, by the way. If you look at the 10-year in our analysis that is included in the basic technical analysis of Forex analytics, we've talked about the divergent relative strength this week, and that's created this buying opportunity, as we would say that resistance will come in at 108.26. And we're getting close. I mean, well, we actually closed at 108.26.27, excuse me. So we finally got back to that resistance. And that divergent relative strength was just suggesting that was going to happen. So if you didn't know that, well, you probably weren't reading, all the analysis that's on Forex analytics each and every day. So make sure you're doing that. Now, as we continue on throughout the week, Thursday, an important day for the Bank of England. All right, so we have a Bank of England rate decision. Well, I just don't do that. I don't want to do that. I want to pull up the sterling. I don't know why I'm going to try to type it out. Now, here's the thing about the sterling or pound dollar. We are actually threatening squeezing pretty aggressively here. I mean, you had this breakdown and the channel breakdown, the range extension should have taken us down towards 122, but it didn't. And so now you can see us right back here towards key resistance, right? You can see how we push through it. There's a 50 DMA right there. And, my thought process is if we squeeze much higher than you see us right now, and let me draw something out for you. If you squeeze much higher than where we are right now and we get back above that 50 DMA, the risk is going to start being that we trade back up towards 128, 129. Now, I'm gonna say that because what the market's going to be looking for is they're going to be looking at the votes, because between the MPC officials, the last vote count was 0, 1, and 8. For a hold, and so we're going to see if we see everybody go to the hold camp or not, or diverge away from that. It's going to be pretty important. So the votes are going to be in focus. Also on Thursday, one of the things that we need to pay attention to is if you have any Mexican peso exposure, is the U.S. dollar Mexican peso. I think last week or the last 2 weeks, I have said that the 50 DMA. Well, let me put it this way: if you listen to the daily show on Forex Analytics, if you don't know how to get there, it's just right here. You go to forexanalytics.com. You go to where it says webinars. We have 2 free shows every day. We have the Flow Show, and we also have the F.A.C.E show. Now, the Flow Show is the European hours. That's with Ryan Littlestone and K-Man. And the F.A.C.E show is myself and the rest of the team. And I pretty much would argue that every day this week, I'm like, whether you're listening there or you're listening on the Morning Edge, which is a private for Forex Analytics subscribers only, that I'm like, hey, you got to be looking to pick up some dollar MEX on dips to the 50 DMA. The 50 DMA are going to be very important support levels. As you can see here, we put in our bias chart that the 50 DMA comes in at 1680 and or 1675, excuse me. We drop down. 1675 is right here, but we dropped right down to the 1680 level. These are all really important levels as you get close to there, and you're seeing buyers starting to shuffle back in the U.S. dollar Mexican peso as a result. The reason why I bring all this up is we do have CPI, we have inflation data that comes out, but also we have Banxico and their meeting later on Thursday. Now that's going to be fairly important because they've been pretty much saying that they're going to be taking the lead from what's happening with the U.S. And what the FOMC is doing. But the problem is a lot of LATAM, in these emerging market countries, they've been actually starting to cut rates, and we're going to see if they're going to follow that path or they're going to stay more in line with what the Fed is doing. Remember, there's a huge carry between the difference of where Banxico's rates are and the U.S. banks and the rest of the world, really. And so the Mexican peso is very sensitive from a carry trade perspective. And if you don't understand those concepts, make sure you listen to our shows every day so we can explain to you, because we talk about it pretty much on a daily basis, what that means. Friday, for early Friday morning, we're going to have the U.S. dollar. We're going to have the U.S. dollar Norwegian krona, but we're going to, and I think last week we said if we break above this 88% retracement, it's going to be bullish. Well, guess what? We stopped right at it. And I have a lot to say about the U.S. dollar Norwegian krona, not at this very second, but I'll be mentioning it in a little bit later. We have Norway's CPI, and that's off the heels of the Norges Central Bank last week. Everybody was expecting a more dovish Norges Central Bank. They didn't quite get it. It was kind of like last week, everybody was expecting more of a hawkish Fed. Didn't get it. Well, they got a hawkish Fed, but not as hawkish as everybody hoped. And so expectations weren't met with the Norges Central Bank. So the NOK started rallying. So you've seen this reversal. The reason why that's very important is because inflation has been fairly sticky globally, not just in the U.S., but globally. So if Norway's CPI is strong, you're probably going to see a downdraft in the U.S. dollar Norwegian krona. So we have UK GDP also around the same time. So that's obviously going to be in focus as well. And then we have Canadian employment to wrap up the week, which everybody's going to be watching with the dollar Canadian. And, we'll talk about that because it did exactly what we thought it was going to do last week, which I'll talk about how important this 136 level is right now, because it is. It's the 50 DMA. It's the breakout point, which is green. Let me delete this red line. Okay, and you can see how vitally important that 136 level is. And I have to tip my hat. I don't have a hat on, but it tipped my hat to Ryan Littlestone. He picked up, if you're in the Forex analytics trades room, if you're in the trades room, you notice he picked up, some dollar CAD, wherever he's at. He picked up some dollar CAD earlier that morning, and then he cut it, already took some profits off. He bought it earlier around the 136 level. So again, hat tip to my colleague and one of our partners here at Forex Analytics. And again, this trade room is an area where you can actually see what other traders are buying and selling, why they're doing it, myself included. It's not to give you a buy, sell, or hold recommendation. It's actually so you can, say, oh, wow, I see that Blake is buying the euro, and you might be short. You might go, I wonder why Blake is buying the euro and I'm short. And then you can just ask me. And then I'll tell you. So that's the nice thing about being in these chat rooms, whether it's the trades room or the general chat room. You can come in or the macro chat room and get news and research from the news and research room. That's the benefits of being inside of a community like this. All right, continuing on. I want to cover some of the important technical levels. And matter of fact, what I should do really quick, just because everybody trades it. And I want to continue on with currencies just a little bit. I want to talk a little bit about the euro, and I want to talk about the dollar because I explicitly want to show you a couple of key levels with these particular pairs. My friend Mark Chandler from Bannockburn, he actually reached out to me on Friday, and he sent me a chart of the euro on his Bloomberg, and he wanted he's like, hey Blake, are you looking at this? And let me just show you what he was showing me. But you can basically see the same thing because we're all looking at the same stuff right now, right? He basically said, hey, Blake, do you see that? And I'm like, yeah. I mean, it's triple confluence in the euro. If we have a 50 DMA, which is in orange. We have the 200 DMA, which is in red. And we have a trend line. Now, you might even argue that it's quad confluence because it's a 50% retracement. So what does that mean? Let's put it all together. Well, that simply put, it means that if we see a break of Friday's highs, then the euro's probably got a lot further to go. Now, let me take you over to the dollar index, because last week, if you recall, my note for the dollar index is like I was very neutral, and we're either going to break out or break down. Well, guess what we did is we broke down. We have a double top that's in play, and that double top actually points us a little bit lower. So let me just explain to you what I just said. Okay, the double top shows that we actually go lower than where we were at on Friday. Now, since most of the dollar index is made up, the genetic makeup of the dollar index, most of it, well, I say most of it, over 50% of it, 56 point something or rather, 57%, is euro. So if the dollar index continues to move lower to complete the double top, where do you think that puts the euro dollar? It puts it in a breakout position. And what that also means is, currencies like the Aussie might be breaking out. Sterling might be breaking out. So I want you guys to keep a really big focus on the dollar index, because I think it's quite critical. I was not in the camp that the dollar was set to explode higher. I needed some convincing, and I didn't get it this last week. Matter of fact, we got the opposite. So what that suggests to us right now is this butterfly pattern potential probably not going to play out. And more of the risk at this stage in the game, if you're looking at the dollar index, is something that, like an ascending channel, or maybe, just maybe, because that seems like the market we're in, just maybe, instead of an ascending channel, we're in a longer term, just big trading range, which is entirely possible. I know a lot of you want to say, think that the dollar is going to hell in a handbasket, and it's the debt to GDP ratio is out of control, and financing and yields can't stay this high, and they got to come down. I understand all the arguments, but that doesn't necessarily mean the market's ever rational. You all should know that. So therefore, we got to see what's in front of us. Right now, it looks like the dollar is vulnerable to at least get to channel support. Could it go further? Yeah, probably could. All right, I'm going to continue on with some analysis of some of the other key markets really quick. Let's take a look at gold, because gold, we've been discussing gold on how it might pull back. Well, it's still doing it, but it's grudgingly doing it. So and this is our drawings that I only do here on the week ahead video, so you can see them and see what I said last week and come back this week and say, oh yeah, look, he drew that. Well, I'm going to draw something a little bit different right now. This could be a pennant. So, I'm not a gold bear. I think it's correcting, but the question is, are we going to correct down to here, or are we just correcting down to here before resuming higher? Here's the other thing about gold. Take a look at silver. Silver, we've been talking about silver coming back down to 26. Well, it came down to the breakout point, almost to a T, and then bounced. So what does that mean? Well, it means that silver is on really important support right now. Could it reach for the 50 DMA? It's quite possible. But while we're above 26 bucks, and I would just argue that this is probably most important right now, is this $26 level. As long as that continues to hold, I got to think that silver still looks constructive, even though gold looks a little bit better. All right. I also wanted to bring up, because we talked about it last week, I want to talk about copper. We talked about copper having a Gartley pattern, and it's reversed, overshot a little bit, but we're reversing. I wouldn't be bearish copper, but I think that we could find some dips down at 435. All right. Also, I want to talk about, the two-way price action that we saw in the market. Do you remember last week's conversation when I was mentioning about, selling may go away? And I'm like, I'm not in that camp. And we looked back historically over the last several years, and May hasn't necessarily been bearish, right? Well, well, just to kick off the week or kick off the month, what we've seen in the stock market is we've seen a recovery, right? So you've seen the S&P recover back to the 618. That's why we highlighted this last week. Do you remember that? We highlighted, there might be some resistance between the 50 DMA and the 618. You probably remember that from last week's video. Well, guess what? I still think it's resistance, but more importantly, I think we can go a little bit higher towards 5,200. If you look at this just from a simple equal leg move, that alone can take us to 5207, right? So with that being said, I know a lot of you are just aching to get short the equity markets. I think there's a time and a place for everything. And in this case, yeah, maybe you want to see if we can stretch out a little bit further, before we go into that sell and may go away. And remember, if you guys want a really good analysis on all of these indexes, the Dow, what's happening in the NASDAQ, what's happening in the Russell, what's the Mag 7, follow Nick at Trading Analytics. He posts so many great charts. He posts videos throughout the week. You can actually find his information in the video description if you're watching us on YouTube. It's down below. Trading Analytics with an X. Remember, Trading Analytics, just like Forex Analytics, but just put trading on it and go find us on Twitter or X, if that's what you want to call it. Yes, Mr. Musk, we'll call it X. All right, continuing on. One last thing before we get into the best trade or the review of the trades. Let's talk a little bit about crypto. This is another thing that I think you all got to be watching here is, crypto. I'm been a little nervous about crypto because of the false breakout, right? That's why you see this here, that big circle. I'm like, oh yeah, look, it's a false breakout. It is. I'm not going to deny that it isn't, but I've also been arguing this week, and you can see it. You can see it in the analysis here. I'll show you on Forex Analytics. You can see we've been looking at it as a bull flag pattern potential as well. And what we're doing is we're finding support there, and then false breakdown on the false breakdown of support right here has created a reversal. So the way we should be looking at Bitcoin right now, until proven otherwise, is probably that we're in a bull flag pattern. Now, if you all think about like the ramifications of something like that, Bitcoin can go a lot higher if the bulls really take control here. I mean, if this is a bull flag pattern, and we can probably draw it like this, and I'm being kind of generous with how far the flag will go, but let's say it looks something like this. I mean, you look at what the upside targets would be if we do see a bullish reversal or a bullish continuation, Next stop would be 92,000 on a situation like that, if this bull flag pattern takes hold. So if you are out there shorting crypto, or especially if you're shorting risk and you're like, well, if Bitcoin's coming down, that means stocks are coming down. Yeah, you got to be a little careful there. All right. So let's, at this point, this is where we're going to review last week's setups, and then I'm going to give you my 3 top setups for this week. Okay, so last week I said short risk ahead of FOMC at 51.45, which is the 618 retracement of the S&P. So let's talk about that. All right, last week I said, hey, short ahead of the FOMC. And we got as high as 51.23. We didn't quite make it up to the 51.46, but post FOMC, we dropped pretty aggressively, right? So do you count that as a win? Because my notes say short risk ahead of FOMC towards 51.45. We got to 51.20. Now, if you were watching this show last week and we were down here and it held you off from trying to be on the short side of the stock market, because I'm like, oh, short up there, not, here or here or here, I would probably count that one as a win, right? That it kept you from being on the short side of the market throughout the course of last week. So win, not win, I don't know. I would lean it towards a win, but that's up to you. All right. The next setup that we had from last week, dollar index, breakout or breakdown. I thought last week was going to be a very big week for the dollar, and it was. We broke down. I do count that as a win because a lot of us played the dollar on the short side last week. All right, now the last setup was buy the dollar Canadian at 136 if you can get it, and we went as low as 136.08. I think. What was the low there? The low was 136.10. 136.10. So I was 10 pips off. But that's pretty damn close, right? And, you have traders that were just waiting for those levels. They got filled on bids. So I'd give that one a win. And, you can go ask my colleague, Ryan Littlestone, how he played that one. Well, actually, you saw it in the trades room, right? You saw it in the trades room, what he did. So check that out. Anyway, let's talk about the setups for this week. So this week, setup number 1, US dollar, Norwegian krona. All right. We've been talking about this all week last week. Some of us are already short. So I'm going to let you know that I'm already short the US dollar Norwegian krona, right? But I want to continue to focus on the US dollar Norwegian krona short because of a couple of things that happened this last week. So first of all, if you take this, I'm going to just remove this. Oops, that's not what I wanted. I want to take this blue trend line. Okay, I'm going to move it. I'm going to recycle it. So we're going to go all the way over to where the post-COVID highs were. All right, that's the lockdown. Then you see that high right there, and you can see the high that we had this week. Basically, major trend line, right? Now, if you duplicate that and you do this, let's move this out of the way. Okay. We are probably developing a long-term triangle consolidation, something that looks similar to that, right? So what does that mean for us? Well, it means there's probably some downside. And you think about everything that happened last week, right? We had the Norges central bank that met, and then they weren't as dovish as the market expected. That turned us lower from 11.14, and then we had the dollar slump following the jobs report. So we had that. And so now you want to be able to sell on rallies. So my opinion here is with the US dollar Norwegian krona, you want to be short the US dollar Norwegian krona while below 11. All right. So if you get an opportunity to sell it at 11 or close to that, somewhere in that neighborhood, that's going to be my number one setup for the week. Now remember, we do have Norwegian CPI on Thursday morning, Friday morning, Thursday night. I think inflation's stickier globally. So the US dollar Norwegian krona is going to be able to benefit from that to the downside. That would be Norwegian krona strength, if I had to guess. And I think you can really manage your risk from those levels. All right, trade number 2, setup number 2, dollar yen. I'm looking for a sustained break below 152. I don't think the Ministry of Finance and the Bank of Japan are doing this for nothing. What they've been doing, I think they're trying to actively manage a little bit stronger yen because they know they're probably fighting a losing battle, but they can't allow for the yen to continue to weaken the way it is. And I think that we're going to get a sustained break below 152. And if we do, I am going to look for the US dollar Japanese yen. And I have no dollar yen exposure at the moment, but I want some dollar yen exposure because if we break this 152 level, I think, and you can see it here, there's a 618 retracement that we stopped at below 152. We're probably targeting the 200 DMA in the days ahead. So that's going to be trade setup number 2. Trade setup number 3. You guys already have seen it. Now my radar was up last week. Now my radar is officially coming, that the targets are now coming into view. I'm looking to short the S&P on a move to 5,200 because you know where your risk is. If we have an equal leg move, it takes us to 5,207, which would be the 78% retracement. I think longer term, we are going to be creating a lower high in the market, which is going to set us up for, a lower low. And could potentially a longer term reversal. It depends on what happens with the U.S. economy moving forward, which Unfortunately, my palm reading skills aren't good enough to figure that one out. Some of you think your palm reading skills are better than mine, so be it. But I think right now we're probably going to create a lower high. So therefore, if we make it to 5,200 in the S&P, that's what I'm going to be looking for. Guys, gals, if you feel that this video has been very beneficial to you, make sure you give us a thumbs up. Make sure you check out the Trader Funding Program if you have an opportunity. This is the best way to be involved in the Forex analytics community, because not only can you access larger amounts of capital, right? You can also get Forex analytics for free based on how much of an account you are trying to access, how much money you're trying to access. If you don't have enough capital to trade, then check out the Trader Funding Program. It might be a good opportunity for you. We have a real simple process. You have to make 10% without losing more than 6% on, and read those specific rules, but we don't have multi-step processes. We give you as much time as you need. You only have access for a certain amount of time with Forex Analytics, but we're very generous with how much time we give you to be in our community, because we want you in our community. We want you to pass. We want you to be successful. So check out the Trader Funding Program. And if there's something that I missed this week, jump down in the comments below and let us know. All right, guys and gals, my name is Blake Morrow. You've been listening to the Week Ahead video. I want to thank you for tuning in this week. I'll see you on Monday morning on the F.A.C.E show, even though it's a UK holiday. I'm not from London. I'm not from the UK. I'll be there. I'll see you on Monday. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.